Well, our market master of the day is Sandeep Bhatia, Head of Equity, India and Country Head in India at Macquarie Group. Sandeep, great to have you back on the program. Thank you very much. Almost wrapped up with 2023. If I can start, before asking you, what the future looks like, but if I can ask you to reminisce a little bit, what were the, say, top 2 or 3 surprises from what you thought when you came into this year and how it actually panned out?
So first, wishing all of you and the viewers a Merry Christmas season and a great New Year. All our offices in Christmas colors, and so am I. So the biggest surprise as we look back on 2024, I think twofold. One is what happened in the US. The recession never happened. And the rate cycle has peaked much faster than most people thought, without doing any significant damage to the US economy. The only political uncertainty that remains is the 2024 elections. And the surprise here is that most of the time people talk about Indian elections throwing a negative surprise. But this time around, it seems that people are worried that the US election may throw a negative surprise. So clearly, how tables have turned. And how life changes. So clearly, political uncertainty and disputed election results may be a risk for the US. It doesn't seem to be a risk for the Indian elections. As far as surprises in India are concerned.
Sure, go ahead, please.
I think it's a positive surprise, better than most people would have thought at the beginning of the year, is the continued strength in the economy and the fund flow from domestic savers into stocks. Despite some bouts of corrections, the retail investor and the SIPs, the systematic investment plans, continue to get inflows. So these are the 2 things which I wanted to flag as I look back on 2024.
Okay, well, look at the Varun Beverages stock, by the way. It's down almost about 3.5%. It's had a dream run in the last 1 year or so, and just some profit taking is what we're seeing. Sandeep, as we head into the new year, what are your preferences in terms of sectors? Any themes, sectors that you're bullish on, where there could be alpha generation this year?
I think clearly there has to be now sector rotation on the back of what I think would be a stronger reform push post-July, when the new government will be able to present its full budget. The Feb budget will be a vote on account, as the finance minister has already discussed and told us. So I think the expectations are for a broader industrial, manufacturing and consumption push. I'll say consumption also, because in the run-up to election, generally there's an increase in spend. Also the fact that India is seeing very strong revenue growth, and one of the best ways to grow consumption is probably to also do a lot of welfare spend. I think that this government will also continue its welfare spend and boost the rural economy. So I think in the run-up to the election, one has to look at if there's a rural rebound, and post the July budget, if there is a trust on broader consumption and broader investment growth. Capex rebound from the private sector has been slow. That's one thing which I'll wait for to see if that comes through in the second half of next year.
Hi Sandeep, morning, and good to see you in, and compliments of the season to you as well as your team as well. I think when we spoke a couple of months or so ago, you were hinting that maybe the Ferris space could do quite well. And that's where alpha could be generated, if I remember correctly. I'm looking at the Chinese data out there, and it appears it's still to pick up. But the good news is spreads over there are at very depressed levels. So things maybe can only improve from here. Do you think that 2024 we could see some of these steel stocks outperform?
The steel stocks will outperform if control of supply in China can continue. So that kind of supply control and production control, if China can successfully put in place, and also the broader, what is called this, the broader emerging markets, the poorer parts of the world, see a stronger growth coming through, then consumption of steel can come through. But it's entirely dependent on what happens in China and what kind of control is exercised by the Chinese government. Our understanding is that China wants a revival. It's trying its best to revive consumption, shift its entire economy, which was a very production-driven, manufacturing-driven economy, to consumption. But there are headwinds, especially in terms of consumer confidence there, especially in terms of the entire property sector. So if that happens, if they are able to exercise control on production, we will see a rebound in the ferrous side.
Okay, I got it. You know, when one kind of looks through, Sandeep, are there real underperformers? I mean, actually, even as we came into 2023, there were those pockets, right? Maybe power had not done as well. IT services, maybe, especially on the mid-cap side, etc. As we head into 24, are there really sharp, areas where which have not performed? I mean, which gives you that comfort? Maybe chemicals is one, but that's a very small space. What's your sense? I mean, you basically got to buy stuff which is already done very well.
I think that's a fantastic question. What do you buy? Because everything is expensive, everything is done well. And do we just continue to ride the PE expansion and price appreciation graph, or we wait to see there is a major correction? I'm not in the camp that in the short term, which is the run-up to the elections, we can see a major correction. By a major correction, I would think a 10+%. So ideally, a 15% correction would be would classify at least as a major correction. Anything over 10%. But as we've seen just 2 days ago, any sharp correction is actually sees quick buying come through. So unfortunately, I think for investors, it's a market with expensive pickings. I would think, therefore, the right strategy would be to position yourself in sectors which are sort of underperformers. So as I said, consumption can be the dark horse for next year, because there are some very high quality companies and everyone thinks that consumption is going to continue to remain weak. But if you take a 2-year time frame, we could have a better outlook on consumption come through. The other, of course, is the entire public sector enterprises. So that will be one sector which generally is cheaper. And in that, I think public sector banks are large, liquid. And the cycle that we are seeing, we have seen RBI do the right moves. They have tightened risk weight assets. They're trying to control the consumer lending, that's happening. And if we see corporate lending and infrastructure lending come through in the second half of this year, public sector banks are well positioned to take advantage of that. So I think these are the two parts of the stock market which have broadly been underperformers or cheaper. Take your pick, and you could look at them performing.
Okay. There are a lot of big events that are coming up in the new year, right? There is, of course, the elections. What are the spaces that you think could benefit from that? There will be a pickup in infrastructure spends, I'm sure. A lot of infrastructure stocks have been doing well so far. What else? Where else do you see the opportunities because of these large events upon us?
I think the common knowledge is that there is more government spending in the run-up to the elections. Actually, we have not seen that happen in a remarkable way pre-elections, at least in the last 2 elections per se. And the government broadly seems to be on track to meet all its fiscal targets. I think what is important is to actually acknowledge that one of the key reasons why the continued success of the current government is the effectiveness of delivery of subsidies. And I think all that can continue post-elections, more likely than pre-elections. But broader consumption revival is the theme which I've talked about in this interview, and I would think that I'll monitor that in the run-up to the elections.
Okay, broader consumption revival, got it. Thanks a lot, Sandeep, for joining in. Appreciate your thoughts here on CNBC-TV18. And once again, from our entire team to yours, thank you for being with us through the year, and all the best for a great 2024.
Thank you.